Let's get a few of the calls of the day. And first up, Tesla upgraded to an outperformer at Daiwa Capital Markets, a firm saying rising oil prices could accelerate EV demand. John, you're long Tesla calls. So what do you think about that premise? Because that has always been the premise.
Well, Mel, we opened basically just $1 or so higher than where Tesla is now. And on those Kimball Musk investigation news stories, obviously it fell, I think, $30 from there and then rallied right back. So I think overall the Tesla bulls are thinking that after the whack that has been going on over and over again in Tesla for the last basically month, that maybe in this range, in that $780 to $800 range, it's not a bad area to be accumulating. Obviously, to drive it back up in the face of that investigation says a little bit about the strength or the commitment that people have. I'm still holding Tesla calls. I've written big calls against it, and I don't see anything in this, either the investigation or anything else in the market, that stops Tesla from continuing on its upward trend now that it's starting to resume.
What was amazing is that yesterday Tesla had, what, a 4+% gain or so, and it was yesterday when that news of the insider trading probe from the SEC broke. And so even in the face of that, it was still able to sweep up higher with the broader tech sector. Let's get to Wells Fargo here. Actually, this is Mike Mayo from Wells Fargo, and it's a call on Goldman Sachs, reiterating his buy rating, $420 price target on Goldman. Amy, you own it. Yesterday, financials didn't do too well, bouncing back today. What do you think?
We like Goldman within the financial sector. We're still underweight financials in general, but last time I was on, I talked about moving some of our position of JP Morgan into Goldman Sachs, and we think Goldman is the better positioned company here. Still has #1 market share in a lot of key important markets, trading at less than 10 times earnings. Good management team, good positioning. So we like it relative to the financial universe, and I agree with Mike's call. It was a good note.
Weiss, you own this too.
I do, and I always liked Mike, and I've, of course, always liked Amy back to when we used to work together, so I agree. Goldman is just way too cheap, and the way David Solomon is re-engineering the business, going more to fee-paying business, is going to be great for him because they've got that gold-plated nameplate that will help drive business. If I could, Mel, if I could harken back to John's comments on Tesla, I still believe the best. I'm harkening back, John. I still believe the best is behind them. They never had to spend $1 advertising. Never. If you harken back to when they started, never $1 advertising. Now they're going to have to spend. They don't have a dealer network. And there's so many choices for EVs out there that you can't expect them to continue to be the leader.
Why do they have to spend? I would think that GM has to spend, that Ford has to spend, that NIO has to spend, but maybe not Tesla.
Tesla does have to spend. The others are spending, and that's exactly why they do. Because they're going to have to show you why you should buy their car and search high and low, hither and there, Mel, to find a service station, because they don't have them. Versus any dealer network where you can go to an Audi, and by the way, their model's looking old already. Those little bubble cars, I mean, come on. Step up, get something new that's got styling. And I'd even take a Taycan that's catching fire in the Atlantic over a Tesla at this point. That's a phenomenal car.
All right.